When markets move, Stephen E. Orr takes the chair. From the White House to Wall Street, he's spent decades at the intersection of policy, markets, and real capital. And he's seen firsthand how institutions use data behind closed doors. Now, as founder of Quasar Markets, his mission is to pull those signals into the open so everyone can see what really moves the markets. This is Stephen E. Orr, Big Beat on Wall Street. Let's filter the future live.
Good morning, everybody. Got Scott Bauer here. Howard's out today. And look, we're excited. This is Scott Bauer, Prosper Trading. How are you, Scott?
It is a Friday. It is all good, my man. And you know what? I think the markets are gearing up for some big volatility next week. We got Amazon, Meta, Microsoft, a bunch of others. And now that we cut through some of the eco data this week, I think we can start to really focus on earnings.
Yep, and let's talk about earnings straight out of the gate. Intel yesterday did not have good earnings. Wow, would you be investing in Intel here?
You know, you and I were just talking offline a little bit. The stock got a little bit like a meme stock, right? I mean, just over the last several months or so, and certainly since the government had announced, that they were taking a piece of it a while back. I would not get in here on this pullback. Technically, I'm looking at the charts here. I'd wait for about the 43.5 to 44 area, which if you look back in December and then again back October-ish, that was an area there was some decent resistance. So we all know, when you look at charts, technically, former resistance can become support. Support can become former, that thing. So I'm looking 43.5, 44. And then
43.5. I love it. Okay. And of course, the other meme stock right now ends up being not a stock, but silver pushing to $100 an ounce. You and I went through it all.
It's unbelievable. I don't know what to say about it. I really don't. It's beyond the point of supply and demand. It's beyond the point of even central banks taking an interest in it or needing it for the precious metal space here. And so I don't know when this is going to end. I know that the trend for both gold and silver over the last 9 months of just buying on any pullback has certainly worked. That's going to stop, but boy, there is so much velocity still behind this. It's a tough trade unless you have just stayed long.
I am looking at, so this morning, interestingly enough, the dollar to the rupee, rupee's the lowest it's ever been. It has now hit an all-time low. And I saw on the news this morning where the trade issues with the United States and the H-1B visas, especially with India, has created India to be the new tech hub in Asia.
Yeah,
is this hurting us?
You know what? I think what's going on globally, in not to get into politics, but I think what's going on is you're seeing other central banks and other countries in the world, the big ones, especially Japan, India, they're kind of disconnecting a little bit from the U.S. And that means a disconnect from the U.S. dollar as well.
Yeah, and when I look at the dollar itself, the Dixie, it's struggling, right? 98.36 right now. It's under the 100. It can't get above that 100 handle. Obviously, our boy Steve Flanagan talking about the dollar. If it's America first and America this and America that, why is the dollar just pushing higher?
That is a really great question, and I think that is why we're not seeing yields come down either. Right? There is a massive concern about debt. There is a massive concern about the sale of U.S. Treasuries from
Yeah.
other central banks, and so that is why the dollar is under massive pressure. I mean, you look at a 1 year chart or even 6 month chart, and this is about one of the weakest periods of time that I can ever remember. As a professional trader, just over an expanded period of time of just not even seeing really a relief rally or so. I mean, if you go back to 1 year ago, basically 1 year ago, so middle January 2025, we were up at 109, 110, and ever since March, basically, of last year. So we saw that big tank between January and March of last year. And it's almost 10, 11 months now that
Yep.
the dollar has struggled getting back to par, getting back to 100. And it's been in a very tight range over that period of time for the last 9 months. Basically, you can take that range of 96, 96 and a half up to 99 or so. I can't remember a period of time where the dollar has remained so consolidated and also been
Yeah.
really a bearish trade as we're in right now. And this is going to break at some point. I don't know if it's going to break higher or lower here, but I would expect you could probably, whether it's 2-3 months or 6 months from now, I'd say 92 or 102 is probably the range to look for in the dollar.
Yeah, and Steve Flanagan, Mr. Currency himself, just said Scott's bang on about the dollar. Bearish sentiment is firmly in control. Steve, just so you know, Howard is out today. If you want to come on earlier, it'd be nice. And I have Elliott Wave. For those of you who don't know, I do love charting. I know that I squawk sometimes about charting being not the end all be all for trading, but I think in this situation, it's Elliott Wave is right on tar.
Yeah, look at that. I mean, look at that. Look at that. I mean, it's
I do know how
the other day. I forget what stock it was the other day. We were talking about it may have been PG or Kraft Heinz. It was Kraft Heinz, and I alluded to that chart being like a black run for me on the slopes, right? Because it's really steep down here. I'd say that chart you just had up on the dollar, maybe not a black run, but a greenish blue where it's just steady decline. I mean, boy, it's hard to fight that.
Yeah, and I'm going to pull up Elliott Wave here and on Kraft Heinz. I think that's important too as well. And I mean, this is the one that obviously has been being dumped by Berkshire Hathaway over the last. And I'll pull up daily chart here. They've been dumping it, and Kraft Heinz is pushing down now. I think I mentioned this yesterday. Please, for the love of God, don't go bankrupt, Kraft Heinz. I do love your Catalina dressing and your honey mustard, but yeah, you look at Berkshire Hathaway here, and without Warren at the helm, still same situation, or is it a different situation without him there?
I mean, it over time, it probably levels out. I think there's definitely going to be in the short run, probably some decision making that might be out of what we're used to over the last 50, 60 years. So I think the mission of Berkshire Hathaway is not going to change, but everybody has their own nuance. Everybody has their own decision making. So we may see some things that maybe are either a little aggressive or different than what Warren would have done. But when I look at the situation in Kraft Heinz, Steve, they're not selling it to raise cash to buy something else.
They just don't like it.
Enough cash, right? Yeah. They can buy anything they want. So this tells me that they're just maybe capitulating and say enough is enough. We're going to take our lumps on this one. We're going to move on to the next one.
All right, let's get to it. Scott, what's on your radar this morning?
I'm looking at going into next week. I want to see how the Amazon, Meta, Microsoft's trade today with earnings next week and what happens with volatility, option volatility. Because quite frankly, to me, it hasn't been high enough. We saw the VIX come down dramatically after Tuesday. That's not necessarily reflective of some of these stocks that have earnings, because we should see pumped up vol going into earnings, which we will definitely get there. But Amazon, Meta, Microsoft are going to be some interesting trades. And out of those three, I do like Amazon the best on the upside here. I think it has certainly lagged recently, especially compared to Alphabet, to Google here. So that is one where, depending on where implied volatility trades today, I like getting ahead of a stock reporting earnings, putting on a trade, like going into the weekend before. And Amazon, it's hovering right at that 50-day moving average. I think we're going to see a pop, maybe not back to all-time highs, which were up at 260 plus or so. But I can see a pop here back up into at least the mid to high 240s. The market right now, and I know we're not open right now, but as it closed yesterday, the option market was pricing in about a $10 move for Amazon on earnings next. Actually, I misspoke. Amazon earnings are in 2 weeks. That's why vol next week is so cheap. I was wondering why vol was so cheap, and then it just hit me that earnings are actually in 2 weeks, not next week. So if we look going 2 weeks out, yes, we do see that vol pop. The expected move there is about $18, $19, which could put Amazon back up to 250 plus. I really like that trade right now.
I like this too, actually. I'm looking at the strategy report there on TradingView. We have TradingView in our system, as everybody knows. I like this move, actually. I think you're right. I'm looking at the old earnings here, and a lot in the last. Look at that, surprises, 24%. Like, surprise, 26%. I didn't even know they were that high. 16% surprise, 25% surprise, and almost every time after a earnings, as long as you waited just a second, boom, right back up they went. Only one we missed was this one here last year in February. So that makes me concerned, because maybe they didn't get the Christmas and the holiday spirit, the Hanukkah sales. That could be an issue there, but they're looking for $1.96 there on earnings, and they were looking for on that one, they were looking for $1.56 on the last quarter, and came out $1.95. So this one actually asking for $1.96. Can they beat on that by their normal 20-25%? That's a rough move there, but
and what it really comes down to is not only can they beat on that, what is the guidance, and what's capex, what's AI capex that they're putting in. That seems to be the big buzzword right now. If they come out and say they're not pulling back at all, then that's going to be very bullish for this.
And I asked the weather yesterday of my Alexa, and it told me about Chicago weather, and I'm like, why am I getting Chicago weather? Because they upgraded my Alexa Plus, right? And there was some mistake.
What Chicago weather is right now?
I don't even want to know. That's why I'm in shorts and t-shirt today, or shirt today.
That hurts. That hurts.
Yes, I bet it does.
Right as we speak, the current wind chill is -34.
I'm sorry. Repeat that again.
You heard that right. The current wind chill is -34. All schools are closed today.
Yeah, as they should be. Yeah.
That's right. People aren't going anywhere today. In fact, I am not going down to the floor today. I am not traveling downtown. I am working from home in the comfort and the warmth of my home office.
I'm sitting in the comfort of opening my window.
I know. You know what I'd like to tell you.
For those of you who don't know, Scott and I have been friends for many, many years, and is on the board here at Quasar Markets. We're very proud of him and Prosper Trading and what they're doing over there. And we will have Prosper Trading inside Quasar Markets soon, so we'll talk about that. But good morning, Zora. Good morning.
Zora's in the house.
Yeah. Yeah, Zori, he is out today. He's out sick today. So I have a pretty good feeling, as cold as it is, he's probably playing hooky, but we'll let him slide on that one. Okay, let's get to it. Look, we've all done that. Okay, let's get to it. We are pushing here, Scott, and I look over at this market and I continue to hear AI bubble, and in Davos this week, and I did not know
they couldn't have been any more opposite, right?
They were the opposite. They were says, and Ray Dalio clearly said no AI bubble. So the stocks go up yesterday in the last couple of days. What's your thought process here on AI? Do we buy the picks and shovels, or do we buy the AI companies?
I think you buy the AI companies, honestly. I don't think the narrative has changed. I really don't. Are we going through maybe a bit of a soft patch right now? Sure. I mean, we saw such major gains, strength for such a long time. It's natural to see that calming down. It's natural to see a little bit of a pullback. I don't think the narrative has changed. However, that's the point that I brought up, just a few moments ago, like when we were talking about Amazon, and when we start to hear these reports coming out of some of the other ones, what are they going to say about CapEx? That can really be I don't want to say the deciding factor, but that can really lead us to the narrative of, oh, maybe we are in an AI bubble if they say they're pulling back, or, this was just kind of a drawdown period, and no, it's going to be running again. But I think, though, Steve, we're deep enough into the cycle of AI that you want to stay best in class.
Right.
Trading, when I'm trading, I typically look for best in class in a particular sector, regardless of what it is: staples, banking, tech, whatever it is.
Yep.
And, especially if you are looking longer term, if you're investing as opposed to trading, stay best in class. Sure,
Yep.
you're going to be able to pick spots here. There's so many AI companies, quote unquote AI companies. In fact, I believe in the S&P 500, 35% of all of the companies in the S&P 500 are affiliated somehow in the AI space, which is just mind-boggling. But I do think at the end of the day, you're going to see, 5 or 10 stocks that come out of this truly on top of the mountain.
You talk about best in class, and that's always been I love that. I think one of the cool things about you and me is that we're just old school. We grew up the right way. We were taught the right way, and not this. I don't want to.
We don't get engrossed with FOMO.
That's right. We understand how the game works. And for most of you don't know, Scott pretty much wrote some of the way that the actual options do work, including leaps. Let's talk about this a little bit. The FOMO has been a little nuts lately, and we are back to Trump tweets. We are back to headlines again. Is it warranted, or are we just over our skis, or are we playing the game as it is in front of us? What's going on here, Scott?
Well, if you're trading, you can always have a plan, but you have to be nimble, and you have to change that plan based on the environment around you. So obviously, Liberation Day last year, maybe March to September, maybe October, we traded with the thought process that at any one point we could see a tweet, we could see a post on Truth Social, we could see something in the news that either derailed the market temporarily or gave us 1-2% on the upside. We saw some calm towards the end of last year, for a couple months, and I think that the market got very complacent. I think retail investors retail traders got really complacent. And then, this past week or two, we got reminded again that President Trump is still in office, and when I say the threat, I don't mean this in a bad way. The threat of something coming out in the news cycle, can really hit the market in any way at any time. It's still real, and it's still there.
All right, let's get to it. We got about 10 minutes now to the open. What are you looking at, Scott, for this open here?
Well, we're a little bit weaker here. I'm wondering why, looking at Goldman Sachs, why that stock is down 2%. I'm looking at some of the other big banks right now, and I don't see that big of a move. I looked specifically for some news there, and I don't see anything specific. So I'm kind of wondering what's going on there. As I mentioned earlier, I want to really focus on some of these big earnings that come out next week. Meta, Microsoft, even Tesla is next week. That's really where my focus is right now. Some of these other stocks that have tried to recover from the sell-off and maybe failed a little bit. Capital One is one, and they had earnings this morning. That stock was beat up on some news over the last couple weeks. Made a nice recovery. Earnings came out. Stock is selling off again. Is it going to level off where it was in the mid 220s or so? Because if it does, I think that's an opportunity around that spot there, 225, 227 or so in Capital One. I've got my eye there, but really I am focused on those big guys that are reporting next week.
And you mentioned both Goldman Sachs and Capital One, and could be a credit card situation there, right, with a 10% question mark. I pulled up XLF, obviously, for those of you who don't know, that's the ETF for the banking sector, financial sector. And Elliott Wave is not really showing it. MACD has started to see a little bit of a turn in the financial sector. I think that the beat up was over the last few days, and I think since the beginning of the year, since the president talked about interest rates, and he talked about obviously cutting credit cards to 10%. So you think that's where the buying should start happening here?
Yeah, I'm not a big believer in that. That's going to happen at all. I think we got to fade that. Maybe down the road, maybe something happens.
I don't even know. Is there a taco trade here? Yeah, I'm sure there's a taco trade somewhere.
Yeah, I saw someone coin that yesterday. It was Burrito Thursday instead of
Burrito Thursday. Okay, Burrito
Tuesday. There's a pattern there. Now all patterns get broken, right? We know that, especially if you trade technically. All patterns get broken, but we got it again. I mean, it happened again, and this taco trade happened within a matter of 48 hours. So the 10% thing and the opportunity with banks here, I do like the banks longer term here, and the reason I do, especially again, we talk about best in class, JP, Morgan Stanley, Goldman Sachs, is the reason that many of them talked about on their earnings reports is their trading revenues are absolutely enormous once again because of volatility in the marketplace. So rates are going to be what they're going to be, and they're going to make their margins. They're going to make their spreads, however it works out. Obviously, if rates do go down, if we see Trump appoint the next Fed chair and all of a sudden we see a slash in rates, probably see a hit in some of the bank stocks. But I think this is a really good opportunity in some of those big guys that have sold off a little bit, especially JP Morgan, to dip your toes here.
And Scott, our friend Nicole Petalides from Schwab Network, I was there last month, and I predicted Costco was my #1 pick for the year.
Yeah, it's what a recovery that thing made, over $100 in about
850 and over 950, and I'm taking profit. I took profit actually yesterday on my Costco. For those of you who don't know, I was going to hold this all year, thinking that was the other one. And the other one that I picked, I call it the C's, which was CRISPR Therapeutics as well, has also started its run to the upside too, and I think probably we're somewhere around the 70s. I'll be getting out too as well. So so I'm a pretty happy camper here over the last few days. So
that's a good thing. So are you doing that straight out with stock, or you?
Yeah, it's interesting, Scott. As much as I love options and futures, I just I'm so nervous with options lately. Strategies, everything, right? It's just been bothering.
We need to have a conversation.
I know. I've been in as you know options for 35 years, and I've just got a little gun shy over this because I just don't know. I can't live on options on a Trump tweet, right? It bothers me a little bit. Yeah, I know we can put on a hedge. Let's talk about that a little bit. Michael Litt from Big Short fame, a dear friend of mine, was on the show yesterday, and he talked about something that I thought was very interesting, and I haven't seen it in a while, and you love it, and that is a Texas hedge.
Love the Texas hedge. Love.
So having you on makes me happy. And I told him that we didn't have time to do it, but if I could, I'd have you on, and here we are. Do you want to explain what a Texas hedge is to everybody?
Yes. So if you Google it, if you look at it, you're probably not going to see it as a quote unquote real option strategy. But what it is basically you're doubling up, right? Thought process behind that is everything in Texas is big, right? So the Texas hedges, instead of maybe buying a call and selling another call against it as a hedge, or doing a covered call scenario where you have long stock and you're selling a call to hedge yourself, Texas hedges, you're taking both positions in the same direction. So you might be buying a call and selling a put at the same time. Or you could do it on the short side too, buying a put, selling a call. So you put a spread on, but each side of the spread is going in the same direction. So basically you're doubling down. Now I typically will put on a Texas hedge when the market has sold off really, really big, and any particular stock gets to an area that I say, hey, if I was going to go out and buy the stock, this is the area I want to buy it, right? And so if I want to buy 100 shares, and I'm just throwing this out here right now, let's say Amazon traded down to 200, okay, for whatever reason, and I'm willing to go out and buy 100 shares of Amazon at 200, which would cost me 20 grand. What I can do is buy a call and sell a put at the same time. Right? It's going to cost me a lot less. It'll give me much better exposure because of the cost, and I'll have the same or less risk to the downside. So I have done a lot of webinars and explanation and videos on the Texas hedge. If anybody would ever love to, or if you want me to ever do one for Quasar, I'm happy to, and I'm happy to walk through examples, but that's what a Texas hedge is.
I love that, and I appreciate that, Scott. All right, we are 3 minutes now, 2.5 minutes now to the open. I have just now. I'm gonna wait until the open itself, but I'm doing what I call a cow order, the moo order, market on open. I am going to buy ZSL. I want to buy a half position. I'm going to hold it for a while. I think that silver at 100 is just nuts. Intel now dropping here now, 47.02. Seeing a little bit now down 13.5% right here before the open. So it looks like a lot of these retail are able now to just open up some accounts to the position. So Intel is dropping now below 47 now, so down on 13.5% here. So we had a massive drop there. Looks like some definitely.
Yeah, watch that 43.5, 44 area. I'm gonna have
my eyes on it.
I'm gonna have some alerts out there.
All right. Well, I may be looking to go long as a meme here at 44, 45, somewhere around there myself.
So I'm going to do that as we speak, with the market opening in about 90 seconds or so.
Yep, I agree here.
That out here, create alert. So I'm going to go 44, and okay.
Yeah,
hopefully, if the stock gets down there, I'd love to see option premium stay elevated, which I doubt will happen just because of ball crush after earnings, because I would love to sell some puts or sell some put spreads if the stock got down that low. But we'll have to see what type of premium these are trading at.
Yeah, and I think I'm going to. I might just go long here. Intel, start adding to my position. 13% sell off is good, and it's a meme stocks. I like that. It's a play. It's not a long term. It's not an investment in Intel.
It's a trade. It's a trade,
but
not an investment.
All right, here we go. We're getting ready to open up. Should be opening up very soon here.
All right, I am going to I'm going to get into the Prosper rooms right now.
All right, let's go. Yep.
I appreciate it very much. Have a great weekend, and love to revisit this when some of the big guys report next week.
All right, love you, Scott. We'll see you later, man.
Have a good one. Thank you. Bye.
All right, everybody, we're about to open up here. It's 9:30. No news right now, but you heard what I'm going to do. I've got ZSL on, and it looks like a good play there. And I just now made a buy here on. Oop, look at that. Just gotta look at my orders here. I'm loving this. Oh wow. Okay. Yep. Yep. Okay. It is a really. I had a feeling that might be very volatile here on Intel. It's just keeping our eyes tight here. Let me know what you guys are out there doing right now. I am definitely watching silver dropping here now. I had a feeling that was also going to happen too as well. 241. Yep. I'm not putting the big positions on, but it is what it is. And I should be in Bitcoin 89.6 now. Intel pushing a little bit here. I don't have big positions on anything, so just understand that. But yeah, and then there's ZSL right there too as well. Silver's dropping pretty fast here. Should get below. Yeah, okay. Not liking that fill there. Yeah. I'm going to buy some more Intel here on this dip because I do think that, and not quite there yet. Can't move fast enough. Oh. Now on silver could drop below here. If it drops below that, then I think we go even lower. ZSL now 243. I gotta look at those orders. Aaron's liking here. He's loving NVDA, NVIDIA, and he's entering on a pullback here, and he's loving AMD. Yep, makes sense. A little bit of a push here. Yeah, if it holds over, okay, yeah. Intel now down 14% here on the sell-off here. Bitcoin not holding up. And Intel's still selling off here. Yeah, nothing going there right now. And you heard him talk about this morning, 45.50. He liked it in there, 45 to 43. So Scott was telling you what he was looking at. Silver pushing back just a little bit here, pushing up now a little bit. And I will also be making another buy here into ZSL. And this will be one that I hold for a while because I think that the CME might come in here and just change requirements here very quickly on people, and they're not going to like it. Okay. Oh, good. Okay. I'm averaged in at 46.72 now on Intel. So we'll see what the game plan is there for Intel. I wouldn't be shocked. I mean, right now on Intel, we're now at over 40 million shares now trading hands here on an average of 67 million. So, yeah, silver struggling again here, 99.35. Looks like the selling is still a little not quite. Yeah, maybe it is stone. I don't keeping my eye on Intel, but nothing doing here right now. Aaron is loving AMD here. Good morning, Aaron. AMD pushing all over the place here. AMD 262.38 with China and the chipsets being released there. I don't, they like NVIDIA. I think NVIDIA to me is the case. I think NVIDIA chipsets, but that run, there's a lot of people that own a lot of shares, and they're trapped in a lot of ways. So I don't know. Maybe they're trying to get out of that trap. I'm not quite sure, but that could be the case. Yeah, 46.32, and everything is pulling back. Yeah, I don't down 280 points, but Nasdaq's fairly floating pretty flat here today, so not much. I think the market right now is a little tired. I guess they're waiting on Iran. There's a lot of things. Tesla bear flagging under pre-market. Yeah, I mean, right now to me, my eyes are really. It's just not everything out there. Qs just aren't showing me anything. We could look at this. There we go with Intel. If the selling was done here, we might have a nice little run here. Oh, wow. Look at that run here on Intel. Keep your eye tight on that, baby. Oh, there she goes. If we can get above 47 to hold up there, now I know there's a linear regression if you're watching the 15-second chart, which is where it's pretty much at, because it's just the speed of this machine here. But I do like this run here on in Intel. It's still a meme stock, and it's been beaten up 14%. Look at this run here. If we can get above 47, this thing could take off. And I don't like meme stocks like this usually, but I think that the over-exaggeration on this is really high. So if it gets above 47 and break above it, it'll go. There are some sellers there at 47, looks like. Get above it, and we go. There's 47. It's struggling at 47, so. And I'm taking my profit there a little bit. That's good. Nice move there. So if you were following me on that trade, it looked pretty good. I'm still in ZSL here. I know that we saw a little bit of a run here on 46.99 still on Intel. Oh, there goes 47. Nah, my bad. I got a little too early. Got a little trigger finger. Happy, but made good money on that one. I like that. That play was good. So congratulations for those of you who are playing Intel with me on that one. ZSL 240, right where I bought it. So nothing there. And I'm going to keep that one for a while, folks. I'm not going to play that one. So. Well, maybe not. Maybe Intel's going to pull back on me. And there goes Q's now dropping. Silver's now dropping again. Silver is really struggling here in 90. I think that's where it's at, folks. 242. I'm in profit now there too as well. And I am very heavy ZSL, but I'm not as heavy as I normally am. I usually run big numbers on ZSL because you need them for the penny moves, and I take 4 to 5 pennies out at a time. So that's where we're usually at. But Intel now pulling back. But I did like that run on Intel. Yeah, very nice move. Ah, there she goes. Until now, 47.50 now, and they're yeah, silver still struggling here a little bit. 47.42 now on silver. Ouch. That's okay though. Anybody else that liking anything out there right now? Ooh, look at the numbers coming in. Appreciate that. Make sure you repost the stream here. Make sure you're coming in. I'm loving it. It's not normal that I'm by myself today. Netflix here now up 1.2% here. Oil, as I said earlier, with the Iran strike imminent, be careful. Oil should push higher here. 61 now dollars a barrel there on WTI. West Texas Intermediate. Someday I'll do a show on oil and different ways of doing that, but 47.03 now on Intel. Yeah, it's too crazy. I'm taking Intel off of my screens, folks, and that's a good trader, and you can just make a trade and walk away from it and leave it alone. Disney down 1% here. Apple down 1% here. AMD up 3.3%. McDonald's flat on the day here. Dow down 300 and pretty flat here. VIX now up 1% here. VXX now at 26.26. VXX 26.26. Q's now pushing a little bit here. Palantir 168 up 1.3%. Robinhood now at 1.55% up. We're seeing 99.56 again, 99.57 there on silver. It cannot get the 100 handle. Folks, if we have these tops in here, these rounding tops in here, yeah, I'll show you what I mean by that. Yep. Let's do that. All right, I'm going to pull up a 1 hour chart. Add to stage. There we go. I'm going to do this right now. Look at this. RSI, CCI, MACD, nothing is telling me about silver, and I'm seeing sell signals everywhere on it. Just be careful on silver here. I know I'm short. I'm not telling you what to do. I don't ever do this. Everybody knows. I'm just telling you, I don't like this rounding right here. This rounding side here is starting to bother me a little bit, and that's why I am short. I know there's a lot of people that say, "Oh, I'm just buying silver. I'm going to own it, throw it in my safe." Well, good for you. I just don't see that happening right now. AVGO down 2.7%. Look, ZSL, you got to be careful. You can't hold it too many. I mean, I am going to hold this overnight just because I think there's going to be a nice sell-off here. But you can't just, you got to be careful in ZSL. It could reverse split on you too as well. So just be very careful. But this rounding here on silver is very interesting to me. We could do a pitchfork too as well. There you go. There's what your numbers are. That does not look positive to me. It looks negative to me. So I'm going to pull up a 10-second chart here. Look at this MACD. Yeah, and you can see as I just laid that on the chart, and it's playing in the numbers here too. So, yeah. And I think what's happening is I think people are looking at the 100 and going, I made money, I made profit. You heard Peter Thomas now talking about it's going to go to 110. So be careful out there. It could go higher, but I will be adding to my Tesla or my silver short here. Manufacturing PMI now coming in at 51.9. We expected 52. So manufacturing dipping a little bit here. Yep. I'm going to put these numbers in here, and I appreciate him coming in quicker because of today. And I'm going to put these numbers in. There they are for you. And Steve Flanagan, my man, how are you, brother?
I'm doing well, Steve. In the land of FX, we had Bank of Japan last night.
Yes, we did.
And they kept rates at 0.75, unchanged. And just for anybody who's just tuning in on Japan, that's 0.75 interest rate. But Bank of Japan, Ueda, made a couple of comments. One, they will keep rising rates if economic outlooks are realized. That was one big one. He expects growth to continue to moderate higher. He expects inflation to remain somewhat elevated. CPI came out yesterday in Japan, 2.1%. That's down from 2.9%. So this yen, I believe, is in an explosive potential position. Here's my point. The one thing BOJ said last night that I think caught everybody was that he needs to give more attention to FX. Having said that, dollar yen dropped to a low of 157.33. We're back at 158.33. And I'm watching this dollar yen going, I'm not so sure that they're going to be able to keep the lid on it. Now, having said that, I don't like to bet against them. When they intervene, they come in with a sledgehammer. As I've explained, it's like a watermelon going down a garden hose because they come in with such ferocity and such a large amount. Granted, $9.4 trillion trades every day in FX, but they could come in with 20, 30, 40 billion dollars, and in a moment, that's a very large chunk to push through the marketplace. So I want to watch the yen carefully. I'm thinking that we could have a play up to 160, but in this environment where everybody is talking sell America, and the dollar index is trading down at 98.25, just above support of 98.0 to 10. You've got some interesting position here. Tuesday, you had a low of 98.25. Let's see where we are right this second, 98.31. Why am I just doing that? Because Tuesday's low, 98.25, Thursday's low, 98.26, and today's low, 98.29. Now, is it possible we're bottoming here? Here's my thought. I'm getting long dollars right here. I will cut myself out in 20 points. That's how little I'm risking, but I do believe that the dollar has a chance. If the dollar starts to base in the dollar index, watch the dollar yen. That could be the one that begins to move to the upside. So that's it for the FX main news. Numbers out of the UK, retail sales PMIs were higher, hence sterling trading at 135.25, and the Eurozone flash PMI lower. Hence, you're seeing a lot of selling euro and buying sterling. And in this environment where people are looking at the dollar and confusion and narratives of sell America, Well, in that case, you want to start looking at your crosses. The yen, and why I bring it back to the yen is a very weak currency when you look at the euro, when you look against the sterling, when you look against Aussie. It's only the dollar that's holding here by the thread before I think we're going to test this 160 level.
And I'm going to ask you about, there we go. I'm going to ask you about the rupee at an all-time low against the dollar. Talk to me, Steve. I want to be buying the rupee, right?
Steve,
that's a no. That's a no. Okay.
It's a yes. I think that there's a number of companies within India that I believe Reliance is one of them. There's a number of the individual companies that I think you want to get a hold on. But until India makes a decision on a trade deal, I believe that they're doing one of these tacit, turning their head the other way. They've intervened a couple of times, but the weaker rupee is, of course, offsetting the tariffs.
And you talk about the rupee side. I mean, I saw this morning where the premier there, he is saying that he is buying gold and he was dumping U.S. treasuries. They no longer own U.S. treasuries now in India. And that's probably why they're dumping the rupee. Is that correct?
I would think so, Steve. Yes. And, for all the talk of everybody selling U.S. treasuries, keep in mind how deep that market is.
Could this be a taco trade here where the president turns around and becomes friends with India again and the H-1B visas and the rupee just explodes to the upside?
I believe so, Steve. That's exactly where I was going. I think you got to be very careful. And so you want to be buying India. I think that if you begin to get an inkling of a trade, you've got a long way to run with that one.
Yeah, I like this trade. I like this trade a lot. Actually, I'm starting to smell some blood in the water there. Wow. Okay.
Do we get a trade deal? That's the whole thing. This could be one of these sneaky Pete's that comes out of left field, and all of a sudden you wake up in India and the United States. I mean, they're talking a potential $500 billion in trading volume. So it would be another huge plus. The whole Greenland thing is quickly moved into the rearview mirror now.
And yet the Dow is down 340. The NASDAQ is fairly flat on the day. Talk to me. We just saw PMI numbers coming out, and they just weren't. The president says he wants to be a manufacturing country, and the January composite now, that's pull it back up. Here's where I see it. 52.8 versus 52.7. This is not the manufacturing that he was expecting. Is that correct?
That's correct, Steve. Yeah. But, it does show a tad bit higher, but you're right. This is an area, if his policies are having an effect, this is something we should be watching carefully.
The United States made a huge investment into a little company called Intel. And one thing I've learned over the ages is that you don't IPO a company, or you don't make a big decision on something and then not be able to beat on earnings the next quarter. And this one really did not. It became a meme stock in a lot of ways, right?
Absolutely. But look at the run up it had. So it's given back its entire run up. I think the low levels of 40 here is a dead buy. The United States, you and I and everyone else in the country, we've already doubled our money in that stock.
Yeah.
We're long at 20.
Yeah. And Scott Bauer earlier on the show was saying he likes to hear at 45.50. Folks, here it is. It bounced off 45.70. Now in the lows today, 45.68. I kind of like this area right here. That was where that low was back in January the 16th. So look, it's not that long ago, folks. We just literally gave back just a few days. It's only been like like maybe 7 trading days. So it's not even that much. So yeah, Steve, I don't think this is a big deal here, right?
Not at all, Steve. And you've got the big hand, the big hand of the law involved. And when you see that, this is great opportunity. All the froth is gone. You want to get back into a company like this. They've got a downside protected.
All right. Well, I like that. In fact, I like this buy here. And I'm not going to make a trade here. I'm actually going to stick Intel in my portfolio now. I do like this trade. I think you're right, Steve. 45.70s. I'll just buy, a couple hundred shares here. Nothing crazy here. Just something that I can keep my eye on the stock. So I like that. Thanks, Steve. I like that. See, right here live on the show. I like this a lot. This is a smart move here. Very smart.
And just for good order's sake, I am also in this as an investor, have it long term. So
okay, very good.
I like it as well. Big news over the weekend, Steve. Trilateral talks, Ukraine, Russia, and the U.S. and Abu Dhabi. I know. Here we go again.
Well, trilateral means three, right? So who's the odd man out on that one?
Well, you got to figure that Trump was just in Davos and he spoke to all the Europeans. And I would think that it's a very crystal clear game plan if we're meeting in Abu Dhabi. Watch out again, like last Friday, here I am again. You've got to have some sort of defensive risk play on. Is it silver and gold? Possibly, given that the geopolitical aspect has been a big mover behind the upside move, as well as central bank buying and others. But you get an agreement or suddenly a framework, and perhaps even better, at least an agreed upon ceasefire until the next meeting. Things could be explosive on the Monday morning. Certainly would be incredible for equity markets, because this is one thing that's holding off a lot of equity buying, particular in Europe. So I would watch this play. I will be out of all dollar positions for the weekend because I don't know how it's going to react. I could certainly make a case that some sort of structure or agreement through this trilateral over the weekend in Abu Dhabi could lead to a much stronger euro dollar, possibly, because the fear factor, the hedging gets taken off, meaning anybody short euros as a hedge has to buy back. So I'll be completely flat in the dollars over the weekend. I would probably have a volatility index on the smaller side, but I'm actually thinking this weekend the other way. If I get an agreement, I'll have an explosive move higher in equities on Monday before
right now. And how do you play volatility? I like the VXX myself. Yeah.
I usually do UVXY.
Okay, yes. Okay.
It's leveraged. I scored 15-20% on it last weekend.
Yeah.
I may have a small position in that, but I may look at if I got an agreement. The one I love to get into with tech is SOXL because it's another leverage. And that has, if I'm playing an upside break here, which I think I will, I'll make that decision as I watch the day here. Let the price tell me what to do. That's the one that if I get an agreement, I think you could have an explosive play to the upside.
Yep. Okay, let's talk about it, Steve. Everybody's loving it, still loving it, and playing with it, and smelling it, and probably eating it. It's silver. What's going on with silver?
The industrial demand is there, obviously, and then throw the retail crowd in. They love it. It should break 100. There's no reason it shouldn't. I do think that a break of 100, this is going to be a classic, 113 paid, 99.90 offered, next price, because you've got to figure there's a tremendous amount of options that people have put on over the last 6 months, which means all your option traders have to defend it. And when they defend it, they're all selling ahead of it. If it breaks, then everybody has open exposure. There's usually a buying surge, but watch out, everybody's long silver. So if it breaks 100, everybody's going to be like, let me take profit. Let me take profit. On top of that, if you take a geopolitical element off the table, such as this trilateral agreement, then that's another little, I don't think silver is going to drop substantially, But a 10% drop from here is 90, and I think that's a good level to be buying it again.
And I bought ZSL. I'm fairly heavy, not a trade size heavy. So I think silver's over its skis way too far, and I think there'll be a lot of profit taking. And I think for very large funds, they'll be like, okay, this is silliness. We got to 100. For those of us here comes a nice little sell off here in ZSL, in silver here. So I think it's below 99. I think you're going to see some limit orders getting spacked here. Okay, I love it. Steve, what you else got on the radar here for me besides over the weekend you're nervous, so you're buying UVXY, is that correct?
That's I'm going to have a smaller size position as a just in case. Basically, I'll have SOXL on because I am looking for an upside break. But having said that, weekend risk, you have to have something on to be defensive.
So are you nervous, or is it just because I'm putting my insurance on, shall we say?
I'm a little nervous, Steve. Yes.
Okay.
I'm not out of that clearing yet, and I won't be, at least in my thesis, I won't be looking at a weekend in a very positive manner, probably in sometime into March. I need to get through this first quarter because, I think once we get through March, all the positives that I've been looking at, I believe, start to begin to play out.
And what specifically are you nervous about? I'm going to pull the Qs up so everybody can see Qs while we're playing here. I'm looking at a 1 minute chart here, and the Qs are pushing higher here. They started this rotation back up to the upside here. If I look at this chart, and I've talked about charts over the last few days, that charts aren't the end all be all, as we know. Pull up so I can get this right for everybody. There we go. Sorry, my chart fingers are a little tight this morning. Yeah,
Steve.
What?
Every boat at the bottom of the ocean has a chart room.
Yeah, and when I look at charts, I look at charts when the market is tired, right? When volume is slowing down, not when volatility is going crazy because of a tweet or a news piece or something like that. It seems that news is starting to chill out, though. This was a strong, heavy week on news with Davos, with Iran, obviously now, we're talking about countries we didn't even talk about before. We're not talking about Syria now, thankfully, but, China is still an issue. The BRICS are still an issue right now. Ukraine is really on the forefront as of this week, obviously. And I'm sorry.
Alert.
But the exact thing that you're nervous more about anything in this market is what?
I'm still worried about the geopolitical aspects of the world. While we're beginning to get a fabric of support underneath of many of these areas, I'm still a little bit skeptical that Russia-Ukraine will get resolved without more loss of human life. Israel and Hamas. Hamas has now been given a deadline. So, I'm still a little concerned. Iran, I don't know what they're going to end up doing. They're on life support, their regime. Do they get desperate? Desperate people do desperate things. Then again, we've had the Treasury Department saying that there's been a lot of the movement of money out of Iran, which would, be a precursor to a regime change or a revolution. So there's enough issues out there, Steve. I'm a little bit, leery on. Having said that, I am fully invested to the upside play. So, when I say I'm getting defensive, I'm not getting out. I'm looking to add on dips. But the thing is as we've seen this week, these dips can be unbelievable. The narratives can just hit out of left field and suddenly sell America.
But you're telling me that sell America is not a big deal.
It's not a big deal. It is totally a fabricated narrative. I do not believe what's going on with the dollar index is people increasing their hedge ratios. In other words, I have $10 invested in the US stock market. Should I sell 5 of it in the foreign exchange market? Should I sell 7 in the foreign exchange market? I reap the benefits of the stock market going up, but as the dollar index is waffling to trade lower, I'm also making money on that hedge against, because I've taken my euros, I've sold them, and I've bought the US dollar to get into the stock market. So this is how people use the currency market. As I've explained, it is the fulcrum under the seesaw. And that's how what's going on, I believe, is just an increased hedging as people are uncertain about what's going on in the US. I believe that trade will get unwound next week.
Okay, Tesla now sitting here at 448.67. Is there any companies out there that you're looking at with all this macro talk? Anything that you're interested in? A sector that you
love tech? I love tech, but watch the Elon Musk interview with BlackRock head in Davos, and this guy just nails it so many times, so many ways. For example, I have it written down. It's now going on my desk as one of those quotes. I only have 5 of them on my desk, so this will be number 6. For quality of life, it is better to err on the side of being an optimist instead of a pessimist.
I mean, I couldn't agree more on that one. It's a lot harder to be a pessimist and be wrong, right? I mean, and be right than optimism and be right and be wrong. Okay, it's 10:07, Steve. I want you to have a great weekend. Stay warmer. You're down here in Florida now, so it's a lot easier. But the snow upstate and up north, NASDAQ now up 48 points now, so the positive here. Are you worried about snow affecting anything up north?
Yeah, Monday's going to be a very difficult day. My family's still up on Long Island, and they're all talking about some heavy snow Sunday, which means it could upset all the commuting traffic into New York City. So, it could be a very difficult Monday, which if you got news back out, all the more reason to be a little bit defensive or offensive going into this weekend. But if these trilateral talks come out with very good news, you have a major snowstorm in the financial center of New York, liquidity becomes a concern. Wow, watch out. So be watching the news.
Be watching the news. I like that answer, Steve. All right, my man. I will see you right back here on Monday. For those of you watching us in Quasar Markets Live, and Howard will be back on Monday. So we are looking forward to seeing you there. All right. Have a great weekend, everybody.